right. Happy Inflation Day, magnificent monetary melonhead. It is CPI Day, that wonderful time of the month where our benevolent government overlords get together and lie to us about how much more expensive our lives are becoming. And today is the day. Today, you're going to hear all kinds of things about peak inflation. Everybody is going to talk about peaking inflation. It is a peaking buffet. Yes, the worst is behind us. Our government overlords, they are going to pat themselves on the back, congratulate themselves on a job well done. They're going to talk about how the Fed has this all under control, but they don't. But we are expecting a slightly lower CPI read to come in this morning. The BLS will report the CPI at 8:30. That is 14 minutes out right now. And right now, we've got analysts are expecting 8.7% headline year over year inflation. That's the number you hear repeated the most, is that headline number, the year over year number. That would be down from the 9.1% read that we got last month. Oh my God, Mish. God bless you.
I'm sorry. I totally thought I muted that.
Well, let's bring Mish in. That's one way to bring Mish in.
I am
We've
sorry.
got Mr. Mod right here. He is off camera today because we had a little bit of lighting issues this morning. Mish is on the road as he always is. How we doing this morning, Mish?
Well, I'm doing pretty good. I'm sneezy a little, but other than that, I think I have to hit the mute button on the mic, not on the speaker.
We're gonna have to work on your quick draw on that mute button, buddy.
Yeah,
All right.
everybody.
So what we got here, Mish? What do you think? What is your guess at what headline inflation is going to come in today?
Well, I do a lot of driving from A to B, and gas prices have really come off, and it's not just the northeastern corridor; it's everywhere. Everybody's come down really quite a bit, and I've noticed it. My tank takes about $15 to $20 less to fill up on a day-to-day basis, so that's nice. So I'm thinking 8.5 on the headline number with a 0.0 month over month, and that's just based solely on food and gas, because even even food is starting to come down now. On the core, I'm thinking it's going to stay rock steady, 6.1.
Okay, so we've got 8.5 headline and 6.1 core. That was your guess, and you're saying energy being the main reason for that. And what we're looking at right now, here's gasoline chart. This is going back about a year right now, so we can see what you're talking about over that last month. We have had a really big reduction in gasoline prices over the last month. They're obviously still elevated versus where they were in previous years, but remember, this is a rolling average, and this is a year over year number. And last month, the gasoline and the energy number overall was a huge input in the CPI. This is looking at CPI chart from last month, and you can see the energy index overall was at 41.6% year over year. Now, that's the average of all the energies. That includes gasoline, diesel, home heating oil, electricity, natural gas, right? All of those commodities, electric services, utility bills, right? But that was 41.6% year over year and 7.5% month over month. That was an increase in energy prices. I'm actually expecting a negative month over month energy price increase this time around because, well, energy did get cheaper last month. Personally, I don't think it's going to last. I don't think this is reflective of a free and open market, but it is what it is. The price came down in the last month. So this 41.6 massive energy index is going to come way down in the year over year number because we're also going to be comparing it to this time last year. So last year prices were rising. So that's known as the base effect. When the number you're comparing to starts to increase also, that brings your year over year change down. So I think we're seeing a big drop in energy inflation, as Mish was saying, based on all the driving he's doing. And you're right. That will weigh down the whole index. Energy was by far the largest contributor. I mean, here, gasoline was 60.6% year over year. I think we see a much more, still very high number. But remember, this is a rolling average. So a smaller number, it means prices were still going up, but they didn't go up as much. So I'm right there with you, Mish. I am at 8.5% year over year. Now, and that's your headline number. Now the core number, I actually think the core number is going to tick up a little bit. We had 5.9% was our core inflation. Core inflation is when you strip out food and energy, because the BLS says it's very volatile, so we don't really consider that as close as all the other things, even though food and energy is an input to all the other prices anyway. But I think that's actually going to tick up because I've noticed other prices continue to rise at a pretty steady rate, even though energy comes down. So I'm thinking we get a slight uptick to about 6% year over year in core inflation. That would be up slightly from 5.9. So that's where we're at right now. We are about 9 minutes out. And I just see we got a super chat from
Mr. Mike.
Mr. Mike. Where's Mike's super chat? Give me a second. I'm still acclimating to StreamYard. There he is. Hello, Mike. Good morning, sir, and thank you very much for the super chat. He says, "Good morning, Jack. Let's buckle up. We might see a large-scale economic meltdown starting. Hope we'll see fundamental changes in governments down the road. You will forgive me if I don't hold my breath awaiting any fundamental change from our government, because when I say our government, I am considering the West, all right? I'm lumping in the United States, Europe, Canada, kind of as a whole here when I say the West. Right now, I see them doubling down on central planning, doubling down on central banks, seizing more control of the financial system, right? All things that got us into this mess. I see the government thinking more of that is the solution. So I don't expect to see any fundamental change anytime soon, or at least not right away. Maybe down the road. I think things have to get much worse than they even already are in order to get that fundamental change. Now, as far as a large scale economic meltdown goes, if this number comes in considerably higher than this 8.7% year over year number that they're predicting as the headline number, if we get another reading with a nine handle, for example, markets are not going to like that, because that's going to mean a more aggressive Fed. And we saw it with stocks rallying over the last month and a half, almost 2 months. All of that is predicated on, in my opinion, the misguided belief that the Fed is going to ease up on the tightening. I don't think they're going to do that yet. I think the Fed is going to come out every bit as aggressive next month as they came out last month. And if we get another high CPI, another 9% plus headline number, then the Fed is going to have the mandate they need to do that. Now, if we get a lower CPI, if we come in, say, well below that 8.7% expected number, then I think we see markets rally, because the markets will rally thinking maybe that Fed pivot is even closer than we thought. I think that would be a misguided rally, because I don't think the Fed pivot is really that close. And I think this lull in inflation that we're about to see over the next couple of months, it's going to be a false sense of security, because it's all coming down to energy. I think this fall, the energy price inflation is going to resume. After the midterm elections, the United States is going to stop dumping the oil from the Strategic Petroleum Reserve. So energy prices are going to correct back upwards, some say violently. And then we also have the European winter is going to hit. And God knows what that's going to do to electricity and natural gas markets and energy prices all over the world. And those are going to be two very, very inflationary forces that both hit within a couple of weeks or months of each other, right as everybody is congratulating themselves on doing such a good job fighting inflation. So thank you very much, Mike. I really appreciate the super chat, sir, and your input as always. And by the way, how's that audio doing this morning? Am I still cutting in and out? We had terrible audio on the live stream yesterday, so I don't know if we fixed that or not. But thanks
Well,
again, Mike.
I think it was the audio yesterday and then me sneezing. I think everyone's ears are cleared out now. I would like to change my guess though to 8.675309.
Okay, Jetty. I think we got that. Yeah. I got your number. You know, I'm going to pick up on that one right away, Mish.
Yeah, no, right? You want to say hi to Sage while you're here?
Hello, Sage. Sage News is in the chat. Sage is our go-to guy for logistics issues. He is like the economic traffic guy. I love bringing Sage on the channel. Check out Sage News Live when we're done here, by the way, folks. He has an awesome channel. He puts out great stuff. And unfortunately, the algo giveth and the algo taketh away. And I think they're punishing Sage right now. I guess they don't like some of the inconvenient truths that Mr. Sage says over at his channel. I've been on the wrong end of a shadow ban before. It stinks. All right, we are 5 minutes out, and I've got 522 people watching right now, according to my live counter. That is awesome. Welcome, guys. Please remember to like and subscribe while you're here. That is 5 minutes away from the CPI report. The numbers we're looking at on the screen right now are from last month. Real quick, I just want to show you what you're looking at here because we'll get a new set of numbers very soon. This top line here, this is your headline number. There's the 9.1% CPI read we got last month. And then these other numbers here, these are the month over month numbers from the 6 previous reports here. There's your 1.3% month over month number in June. And then as you go down, they break it up. There's a little more granularity, right? You get the food index, that was 10.4%. And then they break down food even more. There's food at home. That's like your grocery store bills. And then there's food away from home. That's your restaurants. They do the same thing with energy, all the way down to where is it? Shelter. Shelter is the one when the reason I call it CP lie, the reason why I have very little faith in government reporting of these statistics is because the shelter number is always understated. Now, this shelter forms up about a full third of the whole index. And within that, there's a statistic called owner's equivalent rent. That counts for about a quarter of the whole weighting of the CPI. And owner's equivalent rent grotesquely understates the influence of home prices on rent, right? Rent around the country has obviously exploded higher over the last 2 years. And yet, if you look at owner's equivalent rent at the shelter index, it says the price of lodging, the price of a roof over your head has only gone up by 5.6% in a year. Does that pass the sniff test to you? Think about home values in your neighborhood. Think about your rent. 5.6% increase over the last year. I wish. I could tell you my mortgage payment has gone up more than that just from the increase in my property taxes has gone up more than 5.6%. This is nothing about home prices and rental increases and everything else. So that's the one number that's a very, very lagging indicator. At any given time, we could get a big jump up in the index for shelter that could offset any of these decreases in energy. So that's kind of the dark horse in this race. We'll see if that happens today. I don't think it will happen. Again, the government is financially incentivized to understate inflation. I've talked about this on this channel a lot. The government's expenses are tied to CPI, things like SNAP benefits, Social Security, veterans benefits, they're all tied to the consumer price index, wage increases for federal employees. And yet the government's income increases with the rate of actual inflation, like capital gains tax, people's earnings going up. The government makes more money from that. So if they understate CPI, they get the big raise from inflation without getting the increase in their own expenses. The government is financially incentivized to lie to us about inflation. It drives me nuts when they do it, but such is life. That is what it is. By the way, it's 600 people watching right now. Thank you so much, guys. Please remember to like and subscribe. We're 2 minutes away from the CPI report hitting the tape. This is bls.gov/CPI that I'm looking at right now. This is where the report will show up. What we're looking at right here under news releases, this still says the June numbers with the 1.3% month over month number that we got in June. So we'll be refreshing this like a madman in a couple of minutes here, or in 1 minute. We've got, by the way, what do we have for some of the guesses? I'm seeing 9.8s, 8.4s. I'm
We've
seeing a
seen
lot of
anywhere
guesses.
from we've seen anywhere from 10.1 all the way down to 8.1. 1 minute. 1 minute
Neil's
warning.
Han Dynasty says 10 point, what was that? 10.3? I lost 10.3 for Neil. Get some, Neil. You swing for the fences, brother.
Under 1 minute.
Under 1 minute. All right. We are refreshing the screen right now. By the way, we also have the indexes up here. We're looking at the Dow right now. Looks like it's hard for me to say can't really see on the technical screen. The Dow is set to open up 86 points right now. Looks like the market is so far wanting to head higher. I would also warn you guys, I try not to trade right away on the CPI because the algorithms tend to take over early on. And, the algorithms don't always make the right move right away. So don't try to out trade. And whoa, something just happened to the S&P 500. Look at that big green candle up. I guess the number is out. I don't see it yet on the CPI website. I'm still refreshing, but we just had a big move in the S&P 500 just in the last few seconds. Let's see. Still showing the June number that was reported in July. We are refreshing. This is the worst part, those few seconds after 8:30. Here we go.
Dow just
CPI
got
for all items unchanged in July as fall in gasoline offsets shelter and food increases. The headline number 8.5%.
with a
Looks like I
zero
win
month
this
over
one.
month.
I really needed the W, so we needed that one. All right, the consumer price index for all urban consumers, or CPIU, was unchanged in July. That is a 0.0% month over month on a seasonally adjusted basis after rising 1.3% in June. The US BLS reported today over the last 12 months, the all items index increased 8.5% before seasonal adjustment. All right, so this is a low ball number. Market's probably going to like this one. That explains that big green candle. 8.5% was the headline. I am going to put that on the ticker real quick here. Where is it? We are going to do boom 8.5% year over year.
I think
Let's
that's
throw
a
that one up
3 month
there.
run for me.
What was that?
I think that's a 3 month run for me.
You had 8.5 also?
Yeah, I had
Well,
8.5 with a 0.0.
well, Mesh, you on a roll. That's right. That is 3 months in a row where you have been right on the money. All right, let's get a little bit out of here. That says the gasoline index fell 7.7%. So there's the big drop right there. It was all in gasoline and offset increases in food and shelter indexes, resulting in the all items index being unchanged over the month. The energy index fell 4.6% over the month as the indexes for gasoline and natural gas declined, but the index for electricity increased. The food index continued to rise, increasing 1.1% over the month as the food at home index rose 1.3%. Index for all items less food and energy, that's your core inflation, rose 0.3% in July, a smaller increase than in April, May, or June. Wow, that's interesting. Core was lower. The indexes for shelter, medical care, motor vehicles, household furnishings and operations, new vehicles, and recreation were among those that increased over the month. There were some indexes that declined in June, including those for airline fares, used cars and trucks, communication, and apparel. Let's see if we can find the energy index increased 32.9% for the 12 months ending in July. So that's the big one there. I don't know if you remember, we were up over 40% in the energy index last month. Now that one is well down considerably from where it was. All right. So looking right now, here's your headline number 8.5% with a 0.0% month over month. All right. That's all the talking heads are going to need to run with their peak inflation narrative. All right. They are probably on CNBC right now screaming about how Jerome Powell is the man. He's got it all under control. Moving on. Food index looks like 10.9% year over year. That one's still, again, that's one that disproportionately affects the poor and the working class because a larger percentage of their monthly budget goes towards food. So that one continues to hurt people. 32.9% year over year in the energy index. That's a big drop down from that 40% plus number. And there we see the negative 4.6% month over month. So energy is the big one. That's what really took this down. And you can see that spread out. We've got gasoline came in negative for the month. We've got fuel oil came in negative for the month. Energy services was negative. Electricity was up just a little bit. So it was piped gas, but not very much. Now the shelter index, see, still got those bogus numbers for shelter. I'm showing 0.5% month over month for shelter and 5.7% year over year. That is that's just an outright lie. We talk about this every month. I guess I shouldn't go into it too much in detail. It is getting repetitive at this point, but that's where they really lie to you. This is the statistic here, the shelter number, which includes owner's equivalent rent. That's how they really juke these numbers lower. Let me just do a control F for owner's equivalent rent. See what we got here. The rent index rose 0.7% in July, and the owner's equivalent rent index rose 0.6%. So they didn't give us a year over year number, but you tell me 0.6% month over month. Do you think that's what happened to the rent where you are? Really? Come on. Come on, guys. That's one of the ways that they just gaslight the whole country when they tell us that. Anyways, let's take a trip through the markets. Let's see how they are reacting to this. And you
Hey,
can
let's
see
start with
here,
gold and silver, man.
start with gold and silver. Let's go right to gold and silver. And whoa, look at that jump in silver prices. Whoa, boy. Looks like we had a big jump up to almost $20.80. We had a 30-40 cent jump in silver. It's coming down now. Again, I've mentioned how the initial reaction to the algorithms is not always the right one. That's why I don't trade CPI reports, but big jump in silver. Right now, it's all about volatility. We'll give this one a minute to see where it wants to land. Currently trading at $20.62, which is up quite a bit. Gold is now at 18. What are we at? 1814, 1818. Again, same thing. Big green candle up. Looks like it came down a little bit. It was as high as 1824, it looks, and then it's come back down. So it's still bouncing around. Obviously, precious metals liking this report, as are stocks. Check out the S&P 500 futures. Right now up 1.6%. Big green candle up. Same thing on the Dow, up 1.2%. Looks like predicting an open of almost 400 points up right now. And the NASDAQ should like this more than all of them. And it does. Let me shrink my screen here. The NASDAQ is looking at a almost 300-point positive open, or 2.28%. Somewhat off its highs. It looks like they rallied as high as 13.3 right now. So stocks are liking it. Precious metals are liking it. What about bonds? Looks like we've got bonds are on the rise right now, 2.81 on the 10-year treasury yield. That is up just a little bit. Let me refresh. Yeah, that is up about 2 basis points, or 1.5. So bonds are liking it. Sorry, I'm having a
Dixie.
hard time with this chart this morning. So bonds are up this morning. And let's check out some of the other commodities right
Um,
now.
if you get a second, take a look at Dixie. Dixie is not having a good day.
The DXY. When Mish says the Dixie, that is the US dollar index, or the strength of the dollar as measured against euros, Canadian loonies, Japanese yen, and so on. Yeah, the Dixie down about 0.4%. That is a pretty sizable move for the Dixie intraday.
Well, it's 1.1%.
Okay. This must not be updating in real time because I am showing down 0.4.
Yeah, I've got it at 104.9 right now, down
What
1.2.
source are you looking at, Mish?
Investing.com.
Huh. That's what I'm looking at too. And I believe I'm looking in real time. All right. We'll let that we'll let the software programs worry about that one. Let's dig back into this report. Let me make sure I'm looking at the right one here, and I am. So, what were some of the big ones in this report? I'm looking for some big changes. So, commodities, less food and energy, core commodities. That was a big one. I guess that includes things like lumber and building materials. Saw a big dip
Yes.
in that one last month, from 0.8% in June to 0.2% in July. So
Which
we've heard
makes
some of that from.
absolute sense. Yeah, lumber's going down because of construction slowing down.
Yep.
So that makes sense.
Let's see what else we got. Used cars and trucks. Now, this was a big one all through 2021, and then at least in the first quarter of this year. The price of new and used vehicles was massive inputs to CPI, and we actually got a negative number here, negative 0.4% for the price of used cars and trucks, and we got a very small new vehicle index increase, 0.6% month over month. But that's some of the smallest impact I've seen from vehicle prices on CPI over a year now. So
Well,
car prices.
I read an article recently that repos have gone from, on average nationally, like the national average, from 500 a day to 15,000 in the
Wow.
last week.
Wow. Yeah, I mean, we that Lucky Lopez video that a lot of people were talking about. Um, you know, for years there was not for years, for about a year, there no cars were repossessed. And it seems like now the guys running the repo lots, they can't grab the cars fast enough, is what they're doing. And according to Lucky Lopez's channel, they're not putting all these cars on the market all at once because they know it will crash the price. So these lots that hold these repossessed cars, they're sitting on huge amounts of inventory right now, and they're only letting them drip onto the market to try to keep the prices up as long as they can. I guess they know what's coming, because if all those cars were to hit the market at the same time, well, you get something like a big negative number for the used cars and truck price. So I think we're probably seeing that. And, demand for new vehicles, people just can't afford $60,000 for an F-150 now. I mean, the price of a new car, it's just priced people out of the market, which, that's what our boy Klaus and the Weffers, at the WEF.
forget
That's what they
who said
want.
it. I forget who said it, and it may well have been Buffett, but a person making $20 an hour can't afford a car made by someone that makes $50 an hour.
Yeah, that's pretty well said. And people right now they're just being priced out of the car market. What else we have here? I'm looking at transportation services. We saw a big negative there. That's contrasted against 2.1% from the prior month. That's your fuel service costs, right? Affecting transportation services. Medical care continues to rise, although at a slower rate. So all in all, the takeaway here, inflation has come down. Now, I just want to add 8.5% year over year. A lower inflation read doesn't mean prices went down. A lower inflation read means prices went up slower. All right. Now, zero point 0.0 month over month, that means prices on average did not go up in July. But again, that is using that bogus owner's equivalent rent statistic, which I just don't believe. And anybody with two eyes and two ears also wouldn't believe that number. So I do think this is still grossly understated. However, it is down from where it was a month ago, and that's all the markets need to run away with this one. And that's exactly what they're doing right now. Dow is now looking at a 440 point positive open, S&P 75 points positive open, Nasdaq 325 points up. So it looks like my 14,000 target on the Nasdaq is getting a little bit closer right now. Don't know if we're actually going to hit that one. Been talking about that one quite a bit on this channel. Have that chart up, and it looks like that's in our sights, even though we lost about 150 points yesterday. Here is my target for the Nasdaq up here at 14,000, and looks like we're going to be opening about 12.8 this morning. We'll see what happens when that opens. So we're heading that way. Certainly going to break through that resistance line that I drew yesterday. I'm going to make a sloppy chart real quick. Let's put a orange line so you can differentiate it. But on my live stream yesterday morning, I had drawn this chart that I got from Johnny Bravo. Got to give him credit, connecting the recent highs to where we're at right now. That we were at a resistance point. We bounced off of it yesterday. We were unable to break through it. But with this big open, we're going to blow right past that this morning. So looks like markets are off, headed much higher from here.
Hey Jack, bonds
What's up?
bonds are imploding a little. The 10-year is down 10 basis points in the last 2 minutes.
The 10-year yield is down.
Yep.
10 basis points. Let's see. Oh, wow. Look at that. 10-year yield down 10 basis points. All right. So keep in mind when you see yields, I got to do something about this chart. This is terrible. This is just a terrible chart. When you see bond yields crashing, that is bond prices surging. And a big drop in 10-year yields. This is interesting. It's usually considered a flight to safety when you see bond yields collapsing. Hard to imagine a flight to safety going on right now with a lower CPI print. We're going to have to keep an eye on this one. By the way, this chart is not updating in real time. Don't worry about the chart. I'm looking at this number up here. That's the number in real time. Let's see what the rest of the curve is doing here. Let me bring up my world government bonds chart, because last night the 3-month treasury and the 10-year treasury were separated by 10 basis points? I think
Yeah,
was the
it's sitting at
difference.
12 right now. It's 12 right now.
It's 12. Yeah, we're looking at 2.56% on the 3-month treasury and 2.68 on the 10-year. So it looks like 12, 13 points. But yeah, bond yields across the board are dropping right now. So people are buying up bonds. That's interesting. Is the Dixie still heading lower? It
It was
is.
104.7 last I checked.
Wow. That is interesting. But again, give it time. That's all I'm going to say. Don't try to outtrade the algorithms right after a CPI print. Guys, if you're just joining us, headline CPI 8.5% year over year, 0.0% month over month. The lowest reading in 3 months? Not really that low of a reading. A few months
No,
ago, 8.5% would have been whoa,
I'm not
inflation.
popping champagne tonight.
Yeah. But we're not popping champagne tonight. But I guarantee you, the talking heads in the press, the Jim Cramers, the the spokespeople in DC, they will all be taking a victory lap on this one. This is going to be short-lived. Talked about it earlier in the stream. These energy prices are coming back in the fall when they stop dumping the SPR. And when winter hits Europe, the price shock in energy markets is going to bring these CPI reads right back up, and it's going to scare the heck out of people because people are going to be saying, "Oh wait, I thought they solved this problem. What happened?" And that's when expectations become unhinged, and inflation expectations have a way of becoming a self-fulfilling prophecy. If people expect inflation to get worse, then inflation tends to get worse because they start raising their prices. They start spending their money faster because they're worried it's losing value. So they start stocking up on things before prices go up, which leads to prices going up. So I do think we are in for an inflation shock in the fall. However, in the meantime, looks like we've got a lower read this month, probably looking at lower reads for the next month or two, or at least more in this ballpark. But hey, 8.5% inflation is still incredibly high. So let's not count our chickens just yet. Speaking of chickens, I'm getting lots of eggs out of my birds. I'm getting almost a dozen a day now. I'm very happy. That's my inflation hedge, my chickens that I got this year. All right. It is now 8:46. Well, folks, you know, if we were to summarize this report in a nutshell, lower inflation month over month, that zero point 0.0 number, I think they're going to talk a lot about that one. Um, so you're probably going to see quite a bit of celebration in DC and in the press. It's going to be short lived. They're still lying to us about owner's equivalent rent, but for now, markets don't care. Markets are heading higher. Precious metals are heading higher. It's bond yields heading lower. So, like I always say, I try not to get mixed up in the algorithms after a Fed decision or after an inflation read. I usually just sit back and I wait for a day. We've seen 1,000-point moves off of a Fed decision or off of a CPI only to see it evaporate the following day. So don't try to outtrade the algorithms. You don't have the reaction time. You don't have the firepower to keep up with them. That's just my take. You guys do what you want. Do your own research, your own DD. Arrive at a decision right for you based on your unique situation. And 650 people watching. That is awesome, guys. Thank you so much for tuning into my channel. Please like and subscribe while you're here. And have to mention the Stock Pulse Silver Symposium I'm going to be at on August 30th and 31st in Spokane, Washington. There is a link down in the description below. I'll also pin it in the comments. I'll be there. I'm doing part of a precious metal influencer roundtable. I'm going to be doing that with Ninja and Joe Brown. There's going to be a lot of other big names in the precious metal space there. If you are looking for a way to protect yourself from inflation, silver and gold are some of the best ways you could possibly do that. By far, my favorite of the shiny metals is silver. And speaking of silver, we are at a chart that's hard to read. $20.
Well, I would like to point out while I have the mic here that I will actually also be at the Silver Symposium. I bought my tickets.
Outstanding.
Yesterday. So I will be out in the audience.
So you will see Mish and I making our way through there. If you guys do come out to the Silver Symposium and you see us, please do not be shy. Come right up, interrupt me, say hi. I love meeting subscribers. I love meeting viewers. You guys are awesome. I love the stories I get, the snapshots from around the country when I get to talk to people about what line of work they're in, what they're seeing in their industry, in their part of the country. I've met some really, really cool people doing this. Some of the other events that I've done in Denver and Dallas and San Antonio, I meet awesome people every time. So looking forward to meeting you guys at an event like this. There is a link down in the description below. Full disclosure, that's an affiliate link. If you use that link, you will get 10% off on your tickets. Also, I have to mention that today at, 1 p.m. Mish, is going to be my Patreon only Zoom meeting where I'm sure inflation is going to be the hot topic of the day. That's where I have an opportunity to interact with you guys directly. So, by the way, thank you very much to all my Patreon supporters, guys, for everything you do for the channel. Couldn't do this without you. Looking forward to talking to you guys today. Keep an eye out for that link on the Patreon page. And I think we're going to wrap it up there. 8.5% year over year inflation, 0.0% month over month. That is the headline number. Mish, you got anything you want to add?
Hey, yeah, remember, wherever you go, eat ramen.
I'm never ready for Mish's send-offs. Eat ramen. All right, folks. Well, I think we're going to call it there. Thanks a lot. Please remember to like and subscribe to my channel. Come back and see us again sometime. Till next time, live small and dream big.